We're glad you're joining us because we want to take a look at Google in particular. Every day we've looked at a different FAANG stock, and feel free to comment on the others, but Google, which has been under a little bit of pressure, and today is its birthday. It's 21st birthday, so I mean we could kick it off with that, but the regulatory environment is tough, right?
Yeah, I mean, that's been the kind of the cloud overhanging Google. I mean, we know that last quarter, Nicole, they actually kind of surprised everybody by actually coming in better than expected in regards to their other revenues, which is their cloud group and also their YouTube. That was up 26%, which was very, very strong. But you're right, Nicole. I mean, if you think about, you know, what is the case against Google, everyone will always cite these issues surrounding the regulatory situation. You might have seen today that they hired Rob Portman, who actually ran for president, a former senator from Ohio now, to kind of run their Washington Policy Bureau to try to help them get through this tough time in terms of these allegations against them. So obviously that's a big part of the fundamentals right now in Google, right?
Mm-hmm, absolutely. So, before we get to some of the Google pluses, when we talk about the case against Google, I mean, it's not only here at home. I know you said that big hire, which is a big one, not only here at home, but also the European, obviously, fines that loom and how quick they are to scrutinize Google.
Right, Nicole, and if we look back, we already know that Google is one of the companies that has already made a payment, like Facebook did, right, on the last quarter, to settle EU issues in regards to these concerns about, antitrust, being a monopoly, and so forth. As you know, European regulators tend to be more tough than U.S. ones, even though the pendulum is starting to swing here in the U.S. So obviously not only settling issues here, with this monopolistic claim, but also over in Europe. And how's that going to affect future growth in regards to making payments or settling things? We'll just have to see.
Yeah, and also we just don't really know when it's going to end. I mean, the FAANG stocks have been great momentum players, great growth. People have loved them, but we don't really know when it's going to end. And it's constant. It's constant in Washington. It's constant in Europe as well. And so that's something that I think stands as an overhang. When we talk about some of the online advertising business, first of all, are you bullish, bearish, or neutral on Google at this time?
Well, we own the stock, Nicole. We're holders of the shares. We look at Google as a company that, like Facebook, is very dominant in the online advertising space. As you know, they have about 60 to 70% market share. Even though that's become more mature, it's only growing at a rate of about 16%. They have other businesses. I mentioned the cloud business. They also have YouTube, which is huge in the video segment, obviously another avenue for them and from an advertising perspective. And they also have Waymo. I believe Morgan Stanley came out this morning and put a value on Waymo at $105 billion. So they have other things that they're working to try to generate growth to add legs to their core business,
right,
which, as you know, is search and online advertising, which has become a little bit more mature over the last couple of years, but it is growing at a rate of about 3 times the overall advertising industry business. So
Waymo,
still
by the
relatively
way,
strong.
Yeah, Waymo has been regarded pretty highly. I mean, Waymo has done well in autonomous, AI, all of that. I think that that is something which Google is highly respected for, particularly when we talk about all these automakers trying to do that. Before I get to cloud and YouTube, I mean, any last thoughts on the potential for that to break out?
Well, I mean, you're right, Nicole. I mean, and you think about, well, we just had Lyft and Uber go public, right?
Right.
And on both those conference calls, all they talked about was, well, what's the best way to reduce our costs, right? Autonomous driving, and not have to pay the drivers these fees, which is about 1/3 of the total revenue that they collect. So, I mean, I don't know about you, Nicole. You're up in Chicago. If you want to leave work and get in a car and there's nobody driving, I'm not there yet, down here in Atlanta, but if they could get it to work and you felt comfortable with it and felt safe, that would be huge, because you've got companies like Lyft and Uber obviously would be very interested in having those type of vehicles.
I think this is for my kids' generation, Dan, not me.
Okay,
I live
not you. Okay.
And I live in the heart of New York City in the Big Apple, right in Manhattan.
Oh, I'm sorry.
And so I'm visiting Chicago this week, which seems to be a little calmer and nicer. Manhattan is a zoo, and I don't think I would ever be ready for, you know, pilot driving
I'm
autopilot.
with you.
The cloud unit is another area of expansion and growth. I mean, when we talk about that, I know there's competition in this area, but that's something that also could help Google along as well.
Well, you're right, Nicole. And you know, in the last fiscal year 2018, they spent $25 billion to upgrade their 18 data centers throughout the world to compete better against Amazon AWS and Microsoft Azure. They came out on the last quarter, which really popped the stock up, I mentioned before, and said that our GCP, or Google Cloud Platform business, is having a run rate now of about $8 billion. Most people, including myself, had them about $6 billion for 2019. So they're definitely making some headways. They only have about single-digit market share right now. AWS is still the market leader with Amazon,
right.
But they are starting to get a bigger and bigger presence. And you know, we know that Google has success, right, in terms of when they get into the smartphone business with Android, or get into a business like driverless vehicles. They're definitely going to put a lot of capital behind it, and obviously the opportunities in that space are huge.
So year to date, first of all, we've been calling it Google the whole time, and we know it's Alphabet.
Alphabet.
I mean, we know it's Alphabet, and you know, but we still call it Google because then FAANG wouldn't work out for us, right?
Yeah.
With still the G on the. But it's a year to date winner. It's a year to date winner. Last thought. Do you have a price target for this?
Well, Nicole, I'm not an analyst. I'm a portfolio manager. Unfortunately, I don't have a price target.
Right.
But you know, you're looking at projected growth for fiscal year 2020 at about 13%, and it is a steady grower compared to, let's say, an Apple that's in the FAANG group that's hit a little bit of a flat line here with what's been going on with not being able to raise their average selling prices on their phones. So they're definitely a company in the FAANG group that is still growing, just not at the same pace it might be growing at, let's say, 4 or 5 years ago.